Welcome back to Brazil Crypto Report. Today we're joined by Bruno Ramos de Sousa, who's head of US and Europe at Hashdex. We discuss the current state of the US Bitcoin ETF landscape and why the outlook for a Bitcoin ETF in the short term is not as promising as you may have been led to believe. All right, so we're back here with Bruno from Hashdex. Bruno, it's great to have you back on the show.
Pleasure to be here.
Amazing. So since we last spoke back in April or May, we've had a lot of movement around the Bitcoin ETF narrative in the US. We obviously had Blackrock coming in and submitting an application in June, which was big news. We're also expecting a decision in the GPTC lawsuit, which should be coming out supposedly anytime now, but who knows? And there's just been a lot of hype around this. There's been some of that hype has subsided. There's been some rumors and speculation and perhaps misinformation floating around about what's actually going on in this segment of the market. So, Bruno, I'm really glad to have you back on the show here, just to kind of get like a brain dump from you on how are you processing all of this? How is Hashdex processing all of this? You guys are obviously, live and breathe this stuff. So, wanted to just kind of get straight from your vantage point. Maybe to start off with, would be great if you could maybe just walk us through maybe the events of maybe the past like 2-3 months or so, kind of kicking off in June when Blackrock, we got the news that Blackrock was filing for a Bitcoin ETF.
Yeah, sure. That's great. And I think the last time we spoke, I spoke a little bit about the roadmap for US spot Bitcoin ETF, and I'd say things are essentially unchanged. The only thing that changes is that Blackrock filed, and because of that, there's chaos in the markets and people thinking about things and making assumptions and things like that. So I don't remember exactly when we spoke. I think at the time, perhaps there was already one of the filings out there. So these filings, they happen in batches, right? So somebody files, and then a bunch of guys file after that. But I think it was around May, you had April, May, you had ARK and 21 shares filing, right? So at the time, our view of this was that there was nothing new to justify the filing. It was probably ARK and 21 shares trying to time the market, time the two regulatory developments that I said could happen. I think I mentioned this last time we spoke. One was the result of the GBTC lawsuit, and the other is a bill passing in Congress, right? So these are two things that could change. And then ARK's final deadline would be around January. So we thought they could be playing that scenario. So maybe something happens between now and January, we can be in a good position. Nobody followed them, and that's an important thing. Nobody followed them because there was no actual change to justify everybody thinking that now there's a window. So this is different from the past. In the past, there were moments that you had windows until BlackRock came with the filing, and then you had a combination of two things. So first, lots of folks followed in the following days and weeks. I lost count now, over 10. So there's a bunch of filings there trying to get that being in line along with BlackRock. And a lot of it is just game theory, which is, we don't know. I mean, market players don't know if BlackRock knows anything, but if BlackRock is there, then we should be there, right? Interesting thing is that ARK hadn't moved that needle in the sense that, ARK filed, and ARK is a big issuer. Oh, ARK filed, then we should file too. Is there anything that happened between the ARK filing and BlackRock filing to justify that sort of movement? No, there wasn't, right? And that's an important thing. And I think that's something that's sometimes lost in a conversation. So before I go into that analysis, long story short, what you have is now a bunch of spot Bitcoin ETF filings, and a lot of folks in the market assuming that this time is the one, right? And for those who haven't been following the Bitcoin ETF market in the US, there's always that feeling at some point, oh, now is the one, right? And even though some analysts are pointing to, over 50%, 65% chances of approval, these are educated guesses, and sometimes they can be wildly off, right? So what we have is actually looking at the data and the stuff that's out there that's new, that change the scenario. But there's one big thing that I think the analysts miss, and I want to get into that a little bit. So what did BlackRock bring new to the table? First, two things. First is the SSA. This SSA is a share surveillance agreement. This is something actually we had already looked into in the past, even before us. I think several years ago, Gemini had one of their filings that they mentioned this, that there will be an SSA between Gemini and the stock exchange. And this is something that didn't stick with the SEC for a simple reason, which is the underlying market is not a significant size. That's one thing. And the second thing is that the market is still not regulated, that underlying market. So even if you have an SSA, right? So although those are new factor, it's interesting is the types of things that add layers of complexity to the product and or to the trading venue or the market surveillance in that case, and that it could add intentionally some more infrastructure and security over the Bitcoin spot market. That by itself is not the game changer thing, right? And the SEC had said so in the past. So it is an interesting factor, but it's not something that is enough to change everything, unless it were to give the SEC a pretext to want to approve something. Oh, now I have a new fact. Parenthesis here is that the SSA, there's this Coinbase, which has an open war with the SEC right now, right? So it's not, so it's, these are things you have to take into account. So first new thing that BlackRock brought was that actually it wasn't BlackRock, it was NASDAQ. And that's an important point because that's applicable to any issuer working with NASDAQ. And what we've seen in the following weeks was that NYSE and Cboe, they also went after it to get some form of SSA. These are all under construction. There's no proper SSA signed with any of the exchanges. So this is the intent, to have an agreement, right? Or there may be a term sheet, but you don't have the proper agreement. And these details are very important because it's an actual very complicated agreement. So that's one thing. Now everybody's like in a level playing field in that sense, because all the exchanges will have their form of SSA. The second factor that's new is that it's BlackRock. And I think although BlackRock is very bullish for Bitcoin prices in general and crypto in general, so this is, there's people talk about institutional adoption. There's no more institutional embracing than having BlackRock issuing products around crypto, like this large asset manager in the world. So that in itself is an important fact for crypto, but not necessarily for the ETF race. And I think that's where a lot of the confusion starts, right? Make no mistake, this is not, Larry Fink picking up the phone, calling Gary Gensler and saying, "I'll approve this." This is not how things roll, right? And assuming that just because, and remember, why is it not that how things don't roll like that? Because you have several large issuers going after this. You can say, "Oh, but it's BlackRock." Yeah, but if you look at the combined, you have Invesco there in the race too. You have Invesco. You have Vanek. You have ProShares. You have major WisdomTree, major large ETF issuers, asset managers that have political clout, that have influence, and that have been doing this work for a long time. So it's not like that, right? And so I think it's although conspiracy theories are reasonable to entertain, it's not like I'll call it, because there's several things involved in that. So I think
can we pause on that for just one second, because I think this is an important point, and I think there's there's maybe kind of two versions of this like conspiracy theory that I see floating around a lot, which is the first one is that like Larry Fink is this sort of puppet master who's, controlling Gary Gensler as a kind of a dancing puppet. And, he picks up the phone and calls him, tells him what to do, which is probably not really how it works. Like what you were saying. Then the other maybe more modified version of this would be that somebody like BlackRock would not go through the effort to submit something like this unless they knew there's like a 99.9% chance it was going to be accepted, which I don't know how they would potentially know that, but like that's the narrative that's floating around, right? Is that these guys wouldn't be doing this.
I'll go to the second. I'll start with the second one. That's so stupid. That makes no sense. Like that's not knowing how product innovation works. Like, product innovation is by definition, you're creating something that hasn't been created before, right? And if you look at BlackRock isn't necessarily the most innovative of issuers. It's not like they've been pushing the envelope of bringing new asset classes into the ETF wrappers. They were the creators of GLD, for instance. So when you look at who's pushing, and it's actually smaller issuers in general who are trying what hasn't been tried before. The correct analysis is that the timing looks good. And remember, BlackRock doesn't need to be the first issuer to have massive volumes in its ETF just because it's BlackRock. It has an incredible network of distribution. This is super important. Investment advisors are comfortable in suggesting a BlackRock product. So even if they come out second, third, or whatever, still, they have a good chance of being the largest one, right? So, I'm burning my reputation. No, because that's not how things work. It's like there's always a dialectic process with the regulator when you're trying to create something new. You propose something comes back. So there's no slam dunk when it's actually like a new thing, right? So that's not it. And the first point is on the machinations and things. We have a good guess of why they filed. It's I can't really share this publicly. There's no compromising information. It's just that it's a lot more prosaic than people think. And I think that's, if you go into razors and think, a lot of things that can be attributed to grand schemes and things that sometimes it's just, a couple of folks making a decision. And look at the incentives. If you look at the incentives, you have folks in BlackRock who are in charge of digital assets. A major win for their bonus this year is if they can get something out. And if they can get something out, that's an important thing for them. It doesn't mean necessarily that it's Larry Fink calling the shots. Now Larry Fink, go to TV because we filed. Oh, okay. Then he goes to TV. You can see he's not really a crypto guy. I don't have to not lambasting him or anything. It's just a fact. He's gone against Bitcoin a couple of times in the past, but he's there because, the firm's PR arm said, now it's the time for you to talk about this. But it's clearly not something that was, created in BlackRock's board saying, now let's go, So I think there's, sometimes things in business and in life, they're a lot more, I'd say, less sophisticated than we imagine. Things are just, plain simple. Let's try this, right? So, and in that confusion, people started, because of BlackRock, people started thinking, now it's a done deal because BlackRock's here and now they know, and right. And I'll connect back to the two things I said last time we spoke: GBTC lawsuit and the federal bill. Nothing has changed. Things are progressing, so we might see a decision at GBTC anytime, and we can talk about that more. That hasn't changed. And federal bill hasn't changed. So still ongoing, still possibilities, still things in the scenario. So if you're looking, it's just because it's BlackRock. If we were discussing the ARC filing, we would be saying the same thing. We wouldn't be saying, now it's a done deal, right? And what I think saying now is a done deal misses is that the key thing in all of this is that this discussion and this process is a lot less technical than it appears, right? And I remember, and this is because it's a legal issue. And I remember over time discussing with folks in the company, especially some of the product guys that are engineers, they're like, oh, so if we do this, we'll have that. I say, no, that's not how things work. This is law and this is humanities. And there are several subjective factors. And the key subjective factor here is the SEC's stance on crypto, what it means for the SEC to have jurisdiction over the asset class, what it means for Gary Gensler as chairman in supervising these things, and what it means for Gary Gensler on his personal side and his political ambitions. And so approving a product like this. So this is being lost in the discussion. And the analysts are saying, oh, now, and then of course, and people, the folks who talk about it may say, oh no, because, Larry Fink is, Elizabeth Warren's, support of Larry Fink is important for Gary Gensler. Then you can start going into ramifications that are pure speculation. But nothing has changed on that side. And the complications of, next year is an election year. The definition of, distribution of powers between the SEC and the CFTC hasn't been defined. And the most important trump, pun intended, that Gary Gensler has, or the SEC has in its hands to bring power to the staff and to the commission is actually the approval of this ETF, right? So this is the key product people have been talking about for 10 years. So if it goes through, it's not because of BlackRock. It's because there's, there are broader agreements in the discussions between Congress, SEC, CFTC of who's doing what. This is a big bargaining chip for SEC, and their investment advisors are comfortable in suggesting a BlackRock product. So even if they come out second, third, or whatever, still, they have a good chance of being the largest one, right? So, oh, I'm burning my reputation. No, because that's not how things work. It's like there's always a dialectic process with the regulator when you try to create something new. You propose something comes back. So there's no slam dunk when it's actually like a new thing, right? So that's, not it. And the first point is on the machinations and things, we have a good guess of why they filed. It's, I can't really share this publicly. There's no compromising information. It's just that it's a lot more prosaic than people think. And I think that's, if you go into razors and think, a lot of things that can be attributed to grand schemes and things like that, sometimes it's just, a couple of folks making a decision. And look at the incentives. If you look at the incentives, you have folks in BlackRock who are in charge of digital assets. A major win for their bonus this year is if they can get something out. And if they can get something out, that's an important thing for them. It doesn't mean necessarily that it's Larry Fink calling the shots. Oh, now Larry Fink, go to TV because we filed. Oh, okay. Then he goes to TV. You can see he's not really a crypto guy. I don't have to not lambasting him or anything. It's just a fact. He's gone against Bitcoin a couple of times in the past, but he's there because the firm's PR arm said now's the time for you to talk about this. But it's clearly not something that was created in BlackRock's board saying now let's go. So I think there's sometimes things in business and in life, they're a lot more, I'd say, less sophisticated than we imagine. Things are just, plain simple. Let's try this, right? So, and in that confusion, people started, because of BlackRock, people started thinking, oh, now it's a done deal because BlackRock's here and now they know, and right. And I'll connect back to the two things I said last time we spoke: GBTC lawsuit and the federal bill. Nothing has changed. Things are progressing. So we might see a decision at GBTC anytime, and we can talk about that more. That hasn't changed. And federal bill hasn't changed. So still ongoing, still possibilities, still things in the scenario. So if you're looking, it's just because it's BlackRock. If we were discussing the ARC filing, we would be saying the same thing. We wouldn't be saying, oh, now it's a done deal, right? And what I think saying now is a done deal misses is that the key thing in all of this is that this discussion and this process is a lot less technical than it appears, right? And I remember, and this is because it's a legal issue. And I remember over time discussing with folks in the company, especially some of the product guys that are engineers. They're like, oh, so if we do this, we'll have that. I'm saying, no, that's not how things work. This is law and this is humanities, and there are several subjective factors. And the key subjective factor here is the SEC stance on crypto, what it means for the SEC to have jurisdiction over the asset class, what it means for Gary Gensler as chairman in supervising these things, and what it means for Gary Gensler on his personal side and his political ambitions. And so approving a product like this. So this is being lost in the discussion. And the analysts are saying, oh, now, and then of course, and people, the folks who talk about it may say, oh no, because Larry Fink is, Elizabeth Warren's, support of Larry Fink is important for Gary Gensler. Then you can start going into ramifications that are pure speculation. But nothing has changed on that side. And the complications of, next year is an election year. The definition of distribution of powers between the SEC and the CFTC hasn't been defined. And the most important trump, pun intended, that Gary Gensler has, or the SEC has in its hands to bring power to the staff and to the commission is actually the approval of this ETF, right? So this is the key product people have been talking about for 10 years. So if it goes through, it's not because of BlackRock. It's because there's, there are broader agreements in the discussions between Congress, SEC, CFTC of who's doing what. This is a big bargaining chip for SEC in their discussions, how they're playing out with this. Sorry, I lost my light here. Sensors. Let me change position. See if I get
there you go. You're back.
So, and that's very important. That hasn't changed, right? Of course, discussions in the background happening all the time. But assuming that because BlackRock, all of these things are over with, it's just naive. It's not how it goes, right? So I think that's one thing. That being said, is there a chance of approval? Yes. What is the biggest factor is the outcome of the SEC lawsuit, the Grayscale lawsuit, which can come at any time. And, if you're connected, if you're saying, oh, there's the Bloomberg guys that said now we're putting our odds at 75%. And these are guys, I know I like, they're great guys. I think I love their analysis, but it is the most exciting thing in the ETF world in several years. So it makes sense that some of them can get, overexcited at some points, right? So if you look at the Grayscale lawsuit, there's a good chance, like the market has understood there's a good chance that this is somewhat positive for crypto because of the way the last hearing went. So that's something, okay? It's an objective thing. And as I had said before, it depends a lot on the wording that comes out. And then also one thing I mentioned is that depending on the wording, this can be very good for crypto ETF issuers, not necessarily for BlackRock. And one thing to remember is that BlackRock's process of conversion is a lot more difficult than creating a new fund from scratch, because there's no precedent of a transfer or a conversion from their type of structure into an ETF. And that opens up the gates for several. It's a precedent that's not easy to, it has second, third order effects that not necessarily the SEC might be comfortable with. Right. So what might come, and I think the crux of the or the discussion in the lawsuit is if the futures markets are different from the spot markets, or are they different enough that you can approve one product and not approve the other, right? So there's a good chance the decision comes and says no, they're different. I mean, they're the same, so you can't use that argument. But it's unlikely that the panel of judges will come in and say, now you're forced to approve a product. They'll likely say you can't create this distinction anymore. But there are several other things that didn't go into the lawsuit discussion that play a role. And the first is on Grayscale side, this thing we mentioned about the structure. The other thing that's been coming up in discussions that we've been having with informed folks and the SEC's use of things. And then remember the context. The SEC doesn't really like Grayscale. I mean, they're fighting, right? So the SEC has no incentive. This is, remember, the lawsuit is actually to solve this. It's a lawsuit under the EPA saying you should treat similar situations in a similar way. The legal issues, they are subjective and they are personal in the end. The people have biases. So even if you want to be very fair, sometimes you have a bias that limits you. So, it's fair to say that the SEC staff doesn't see Grayscale the best dice, especially with everything that happened everything that's happened with DCG. And there are problems with Earn, there are problems, there's, with GAC, whatever. So there are lots of issues.
Yeah. And this was a point I kind of wanted to double click on, actually, just because I think it's an important one. And, kind of going back to your original point about there's a lot more subjectivity in these things than perhaps we would like, or perhaps is desirable, but people are people and people will have their own biases and incentives and whatnot. And in the case of, I mean, obviously when somebody is suing you, you might not look very favorable toward that entity, right? You may not necessarily be wanting to do them any favors. And also just in terms of the publicity, like Digital Currency Group has really just been at the set. I mean, they're my former employer, so full disclosure, but they have been at the center of really just kind of the implosion of everything in the market over the last 18 months or so. And I imagine that Barry Silbert is not the most popular figure around the halls of the SEC. And obviously you guys are a competitor of Grayscale and whatnot, but all that taken into account. But just looking at this objectively here, it's I have a hard time seeing why the SEC would want to, do any favors for Grayscale DCG at this point.
There's a reason they chose a lawsuit path, is that because of the way GBTC works and is structured, they will never be the first to market in a conversion. They will never. It would always be some new issuer. So the only way was to add a new element, which is, element that creates confusion, and you have a judge in the middle, and that changes things a bit. But as connecting to what I was saying, you can have a positive decision on paper for their claim that the markets are essentially the same, and that in the end benefits the other issuers first, because facts of life, you have a trust running, so it's not easy to convert that. It's very complicated. So and just to sum it up, there's a reason you avoid suing your regulator at all costs. It's it does create a bad blood. So it's there's nothing strange here, right? And the thing, why am I saying this? So I'm not saying that the SEC will try to harm Grayscale. That's not the case. It's in the end, people are professional and they'll abide by what the judges are saying. The thing is that because this issue is complex and subjective, and biases come into play and so on and so forth, the SEC has no incentive to make Grayscale kingmaker, to be a kingmaker and make Grayscale the king with the first. This I don't think that happens. And opening up a little parenthesis, one of the other things that took off in Twitter was oh, the SEC is going to approve everybody at the same time. There's no base to say that. There's no base to say that, right? It's why, right? You have different processes with different timelines. I think what happened in with Beetle being the first was very instructive. You had people almost at the same time, and those 2-3 day differences, they made a lot of difference in the end. But a batch approval, like there's not much why you would do that.
And Beto, and just for clarity, Beto was the first Bitcoin futures ETF that was approved, right? Back about 2 years ago. And just by having like a 2-3 day head start, they basically took the entire market, just on virtue of having that head start.
And at that point, the SEC could have approved Beetle, Vanek, Valkyrie at the same time, and it didn't. It followed the order. And also, how these things work. Each of these filings, different folks internally take care of them. It's not a single guy. It's not a single group. So there's even like the question of the work of the individual, right? So maybe you have, some head of one of the units saying, let's try to get this over by this week. But it's different than saying everybody has to finish theirs by Thursday, right? It's an office. The SEC is also an office, right? So there are other things. There are things that sometimes are more urgent, and so analysts that are faster, that are slower. So these things are all like just to add to the complexity of the whole thing, right? So not saying that it can't happen. I'm not saying that assuming it will be a batch, there's no ground for that, right? So essentially, it's still a very big mess, right? I think people are looking for clarity. I'd say it's a lot more complicated than it was a few months ago. But there's no silver bullet saying, oh, now this is the one. This is the one. And why is there so just to finish that thought I was building, the element that's been showing up in a couple of conversations that we've been having with Infolk forums is that one thing that the SEC can bring into the table that it hasn't brought up yet because there was no need, because it was killing the filings before that stage, is, let's say the judges say, okay, you can't differentiate the markets. They're essentially the same market. It's okay. So I can't use that argument. When you go into the inner workings of the product, one thing you can start questioning, and the SEC has done that with tangentially, not on the ETF side, but with other things, is the qualified custodian rule, right? And start going into custody and say, you're not a qualified custodian, and we would need a qualified custodian to hold these assets, like we would need for an ETF holding securities, a qualified custodian for those securities. And I'm applying by extension this. And then you go into all sorts of things. Oh, that doesn't apply to gold. Do you have that standard for qualified custodian for gold? No, gold custodians are banks and brings and security firms like that. It's it's not regulated by the SEC, right? But with crypto, I mean, the process for the ETF shows that there have been standards applied to Bitcoin that haven't been applied to other asset classes, right? Otherwise, you wouldn't have a lot of ETFs out there, the commodity ETFs. You have qualified custodians for rice, for wheat, and you still have ETFs for that, right? So I think it's there's still a lot of things in that. So let's say if the SEC's political position is, I don't want this to go forward, even with the lawsuit preventing me from talking about futures markets, you still have custodian, you still have other things, right? And I would point out in a different direction, saying one of the things that took off in the past weeks is actually the Ether futures filings. A lot of the folks came along and filed. And for those of you, who follow, maybe 3-4 months ago, there was also a couple of filings, 4 or 5 filings that were made for Ether futures, and they were withdrawn in a couple of days later, right? And we looked into it and said, oh, no, this is going to be withdrawn, right? What is the difference this time? They haven't been withdrawn, right? And they haven't been withdrawn, and being withdrawn is essentially a non-technical thing, which SEC staff might call you and ask you to take it out by saying, I'm gonna not necessarily take it out, but saying, you know, I'm gonna disapprove this. I'm gonna not deny. So don't even bother. And then folks, okay, I won't even bother. And remember, this creates work for people. Like you're making a filing, somebody in the SEC staff is going to have to respond to that filing, and you're going into technical analysis of the depth of the Ether futures market and things like that. So they might say, we're not going to do this because we think there's not the time for this, and so whatever, we're not going to approve it. And this time it didn't go. It hasn't been withdrawn. So there are a couple of possibilities. One is just that the SEC staff this time said, okay, I might entertain this. This is odd. Some folks in the market are betting. Oh, and then they're saying, oh, now this is going to be approved. The second thing is just that the issuer, the first issuer especially, which is the same to file for the leveraged Bitcoin ETF, just thinks that there's a good chance that the SEC can't really deny it. So they're taking it to the end. And by taking it to the end, they might go into sort of a dispute with the SEC and create some friction and bad blood. And they're okay with it and say, okay, I'll buy this noise and I'll pick this fight and let's see what happens. So it might be as simple as that. And then the other issuers, they're just, again, game theory. Oh, this file, let me file too. Nobody took it off. I'm not taking it off. So there's no guarantee that it will be approved. I think one good reference is the depth of the futures market. Is it enough, the Ether futures market, is it enough to hold those ETFs? Maybe. Depends on how much interest there is. We saw Beetle in the beginning, the first Bitcoin futures ETF, having issues at some points with contango and things like that. Maybe that could happen also with the Ether market right now, but there is some technical analysis that can be made around the ability of the product to be there. And then you started seeing some filings combining Bitcoin and Ether and things like that. So on the future side, this is, I'd say, a lot more promising because it's like a tried and tested, underlying asset, which is, futures contracts and so on and so forth. And you're just trying to add Ether there to the mix. You already have Bitcoin there. So I say with those, people have more reasons to be optimistic, but still, if anybody's slam dunking saying this is going to be approved, I think either they have no idea what they're talking about or it's clickbait and they're looking for likes on Twitter, right? Because
right.
At this point, people should know better that these things are very complex and subjective, right?
Yeah, and it seems like after 10 years of being in this the Bitcoin ETF race or whatever, it seems like anything that sounds too good to be true probably is when it comes to these sorts of things.
Yeah.
And just to kind of summarize our conversation, I mean, it seems like everything you're saying is centered on this point that there's just a lot of noise out there. There's a lot of, maybe some of these analysts have kind of gotten, ahead of their skis a little bit. I think also like crypto is just really in search of a favorable narrative right now. There's really just not that much like other good news out there, just to be perfectly frank about it. And I think crypto is always sort of in search of what's the next thing that might propel us to, to the moon or wherever we're trying to get to. Right. And the ETF narrative, once BlackRock jumps in, it's like, oh wow, things are moving. Like we need to start paying attention. So it's easy to understand why people are maybe getting excited about this and getting optimistic, getting bullish perhaps. But it sounds like from what you're saying, just kind of as the insider perspective who's been playing this game for some time now, the fundamentals really haven't changed at all. And there's a lot of positioning going on behind the scenes. There's a lot of everything down from, even down to just like the minute office politics of how the SEC functions that we need to be. There's just a lot of stuff we just don't have any visibility into at the moment, and making any kind of rush judgments on any sort of slam dunk or like this is it's a 65% chance this thing is coming this year is perhaps people need to be tampering their expectations a bit. It sounds like is what you're saying.
I think that the most important thing about the BlackRock filing, it was true before with other filings, I think, from large asset managers. But BlackRock has this, that symbolic thing to it. And that's the good news for crypto, is that for Bitcoin especially, is that this is here to stay. Okay, so like if you had any concern that at some point this will be killed by regulators, but but this and that, it's like like this will be embraced as a legitimate asset class by the U.S. establishment, but like it has been in several other countries. So this will happen, and this is super bullish for Bitcoin, super, right? So, okay, the ETF doesn't come in 3 months; it comes in 2 years. For the long-term perspective of Bitcoin, it doesn't make a difference. It doesn't make a difference. Like you're still going to have, the effect of that, which is like every investment advisor suggesting 1-2% in Bitcoin, pension funds, retirement accounts, like mom and pop, like everybody having some form of exposure to Bitcoin. What that creates for Bitcoin's prices is, hard to calculate. If you try to go after that calculation, it's very hard because it depends on assuming how much net new money is coming into crypto and how much it moves. There's some interesting tests around that, but it's hard to say because this is very dynamic. Like you have things that come into play, and there's these spin effects that come. So you're going to have a lot of U.S. institutional and retail money coming into Bitcoin in levels that we've never seen before. And if it doesn't happen this administration, it will be in the next. At some point, this will happen. And I think that's the most important thing to take out of it. Instead of, of course, if you're a trader trying to trade Bitcoin prices and all these things, they connect, and it's like, and these are news, and it's very important news in this cycle. It's one of the major things. But if you're a long-term holder and believer, whatever, if it's not in this round, it will be at some point. It will come at some point, right? So it's like you have things today that you didn't have 3-4 years ago that make it inevitable. It's just that sometimes folks need patience. So it's like cool off. It's okay. The most I'd say, in whichever case, my personal perspective of this, and this is not investment advice, this is more how I think about things, is that, if you look at cycles and you look at halving cycles, and, there's a very clear pattern that's been happening in the past 10 years. There's no guarantee it will repeat itself today, but there are indications that we're beginning in the beginning of the recovery phase, and that next year could be a positive year. It can be a positive just if you look at charts, and just because of the halving. If you top that with federal legislation in the U.S., which I think has a very good chance, and the possibility of a U.S. Bitcoin ETF, then these are major market events, and they combine with the more technical analysis, and they look very good, right? So if you are somebody that has a position, wants to increase a position, or considering is this a good time to go in, and one thing we try to tell investors is that, especially if you're in the long run, coming in 25 or 35, this is not the thing that changes your life dramatically. If Bitcoin plays out to be what it can be, right? If it moves kind of sideways, then it makes a big difference. But if Bitcoin becomes a store of value, like it might become, if it becomes an asset that has 1% of global portfolios and things like that, then we're talking about multiplying by 5, 10, 12, 15, whatever that number is, right? And there's, again, no guarantee that this is going to happen. But if what you're looking is outsized returns, waiting for a variation of 10%, 20% up or down, this is, every investor we saw that tried to time the market, they got screwed. This is hard. If you're a crypto hedge fund trying to do that, it's very hard. You're getting kicked at by the index 95% of the time. If you're most crypto investors that you don't have data, information, teams to work with you to try to build that, chances are that you'll lose money most of the time trying to price it. So the long-term game is a lot better, and I think that we think the US ETF should be seen in that perspective, in the long term, what it means. And yeah, so it's we're excited for what's.
Yeah, that's a helpful analysis. I appreciate the color there, and really, I think you articulated very well. There when we're talking about the Bitcoin ETF, there's basically two different conversations. There's the short term speculation of like what's the motivate? We're trying to mind read BlackRock. We're trying to mind read the SEC. We're trying to mind read all these other people. Like, what are they doing? Why are they doing it? What's the motivation? And there's all this kind of fun speculative games and things that people play. And then there's the longer term kind of bullish case where, like what you were just outlining. And I think it's important to remember as well that I think one of the concerns or potentially, kind of maybe reasons people might be not super optimistic or super like positive or about the impact of an ETF on the market would be people are wondering like, where's all this investor funds going to come from, right? Like crypto isn't exactly a market that people are like just lining up to invest in at the moment. But but like kind of what you're saying, it's the longer term play, right? It's like if you have investment advisors that are suggesting a 1% to 2% allocation of a portfolio in this asset class through an ETF or something, and then you're letting that play out over several years, then that's where the value generation really we start seeing real kind of scalable impact there.
No, there's huge. So I think Brazil's an interesting example. We covered Hash 11 last time we talked. We saw what happened when the asset class was embraced, not only, let's say, by the regulator, but by the financial advisory community, which is what happened with our funds and ETFs. Like, you take out the career risk for the financial advisor to recommend crypto. And then it starts becoming an asset just like the other way. It might go up, it might go down, but I'm not going to get fired by my client if I recommend this. Why? Well, because this product exists. There's a product that's been offered by Blackrock, offered by Invesco, offered by State Street, or whatever. Like, so this is a legitimate asset, just like I could offer a gold ETF to a client. And there's in the US a huge number of investors and hundreds of billions of dollars, trillions of dollars that don't touch Bitcoin that can potentially touch because there's an ETF. So like the effect of the ETF on that, the ETF changes the demand. Like, where is the demand in Bitcoin now? Oh, it's for people who understand Bitcoin and think there's this is on the long term. Once it's embraced by an ETF in the US, by ETFs in other countries as things continue, you open it up to a whole bunch of investors. And I can say this from firsthand experience because it's the type of conversations that we have in Brazil. What we had in 2018 and what we have now, completely different. What we have in Europe, when we sit down, so Europe is very fragmented. So I'm based in London. London, we don't have ETPs trading here. There are no crypto ETPs trading the London Stock Exchange. But you have them trading in Germany, in Switzerland, in the Nordics, and in France, and in the Netherlands. And then depending on the country, the adoption is very different. And it depends on some things. But especially if you go to Switzerland, Germany, and the Nordics, the acceptance is huge. So when you sit down with an investor, they're talking about the asset class like they will be talking about China bonds, or it's like, oh, is this a time? Is this good? What's happening? Why should I go in now? They're not saying, oh, this is a Ponzi scheme, right? And then depending on the country, you go to Spain, that's what they're still saying. Oh, no, this is a Ponzi scheme. Why? There are no good products. There's not listed in the exchange. So, and this goes from the proper allocator, meaning, hedge fund manager or family office manager, to a banker, to somebody that's just that runs a retail investment platform. The views, they evolve, and as they evolve, they make it they make more people come in. So that's what's going to happen in the US, and it's it's super exciting to see because we're still in the first innings of the game in terms of it. And even in the US, you have Bitcoin, then Ether, then we go into the baskets. Then you have all sorts of very interesting, especially because the US market, the ETF market is so evolved. It's the most evolved in the world that at some point we're going to have cool products that we don't have anywhere else. We're going to be able to have them in the US, like, inverted products or, transparent, actively managed products. This is something you don't normally see. Like we have here in Europe, we manage a smart beta ETF. It's pretty cool. Like that type of thing, smart beta crypto ETFs or alpha seeking crypto ETFs. So there's still a lot, a long way there. And that's just the opening salvo, the Bitcoin spot.
Right. Yeah. No, and I appreciate kind of the dose of like short-term realism with like long-term optimism. I think that's kind of like, that's what we need in the bear market, It's like we can't be deluding ourselves with crazy narratives, but like, look, like we're all here for a reason. We all believe in this. So I really appreciate
and I think just to wrap it up, like in our cyclical view of things, and it's actually the way we think the company is the next bull run that comes. This will be the definitive bull runs on institutional offerings, meaning traditional players coming into crypto with all sorts of things. And if a firm, and saying how we place ourselves in the market as a crypto firm, if a firm has established itself by the next bull run, then the windows will be like very small, right? So you're working on tokenizing real world assets. Okay, like get your act together because, you're already fighting with PLCs from large banks in the world. In the next run, they will all be offering their thing. What do you have? Oh, I know how to tokenize something on the Ethereum blockchain. Okay, everybody knows that. But the deal sourcing is in the banks. It's not with you. So you better get some traction now. You better have something else. Like we have a comfortable position because we have a name, we have stuff out there, we have but still, depending on the market, things will get very crowded. We know this from Brazil. Like good luck trying to launch a Bitcoin ETF there. Some markets in Europe are more challenging than the others because right. Mm-hmm. So the markets are still very close. You go into Hong Kong, they have the Bitcoin futures ETFs. Issued by two local players. Can an external player go in? Well, it's very hard if you don't have some form of JV with a local player. So all of this, and I personally think this is next year, we're going to see, a frenzy of folks coming in again as the market recovers, right? So interesting things to watch. This
amazing.
Run. Yeah.
Amazing. Well, I appreciate the predictions here. I appreciate the optimism, and most of all, appreciate your time. Thanks for being here and for kind of the download. I learned a lot here, just sort of absorbing all of this, and this is definitely helping me kind of sift through some of the narratives and some of the news and whatnot, and the Twitter conversations, etc. So really appreciate your time and your contribution here. And then just really quick, like if folks want to get in touch, what's the best way to find you?
Twitter at BRS Hashdex. So that's me.
Amazing. Okay, I'll put a link to that. And great, Bruno. Thank you so much for your time. And we'll have to have you back on again once we get some more some action on the US side here. So
always
amazing.
Super happy.
Amazing. All right. Thanks everyone for listening, and have a great day.